Hello and welcome to Switzer TV. I'm Peter Switzer. This is my colleague Paul Rickard. Hi Paul.
Hi Peter.
So let's talk about the IT sector.
Well, in addition to the names such as Microsoft or Google or IBM, particularly in the US, the names have been making a lot of mark the last few months, so the names such as Facebook, Twitter and Netflix. And in the graph in front of you, you can see those three companies together with both some more traditional and less traditional valuation metrics. For each of those companies, we've got the price to earnings ratio, and of course, Twitter, which is not yet making any earnings, it's got a negative ratio. But we also have price to sales and price to cash flow. The price to sales ratio is taken by looking at the company's total market capitalisation and dividing that by its annual sales, and some pretty high numbers there.
And a big number is not good, small numbers would be better.
Not from a valuation point of view, that's right, Peter.
Okay, so why don't we start looking at the Australian sector? There are pretty big numbers. What do we see in the Australian sector?
We also have an IT sector, but it's nowhere near as big as the US. The US sector, in terms of the S&P 500, the IT sector is about 18.5%. In Australia, our sector as part of the ASX 200 is only about 0.8%, so it's tiny. But that said, as the graph shows, it's actually done pretty well the last 12 months. In fact, the IT sector, what we call the IT sector, has outperformed the ASX 200. And that's really down to its three constituent companies, Computershare, Car Sales and Iris.
Okay, and we've heard companies like Xero and Freelancer coming along the way. They're quite new. What do you say about those sorts of companies?
Well, I think both you and I, Peter, have actually taken a bit of a speculative play in Freelancer. It's a new company. I think Xero is a bit more interesting because a lot of people are talking about it and certainly has some good opportunities.
Yeah, and it is taking on US rivals. It's admitted it's not trying to make profits, trying to get acquisitions and really take on its US rival, and it's doing pretty well. But what's your overall take about the companies in the IT sector?
Well, in addition to Freelancer and Xero, I've also added Car Sales, the REA Group and Seek on the same sort of valuation ratios that we use for Facebook and Netflix. And both Freelancer and Xero are pretty fully priced on a price to sales ratio. The other three companies obviously come out with much lower multiples.
That's right. And the bigger the number on, say, for example, a price to sales ratio, the worse.
That's right, Peter.
Okay. So looking at these companies, Seek looks really good, looks like a normal kind of company. Does Xero or Freelancer have the capacity to be like them in the future, do you think?
I think Xero certainly has the capacity and the potential to be like one of those other companies in 2 to 3 years' time. My only caution, Peter, on those numbers, it's pretty fully priced.
And it's a speculative play.
I think you've got to say it's a speculative play.
Okay, thanks, Paul. So that's Switzer Super TV for this week. Thanks for joining us. We'll see you next week.